As you guys know from the very first introduction video, I mentioned the ways that most people get into trading. And that's either from some long-term investment that hit or a crypto YOLO play that made them that first step to generational wealth. Well, that's when people make money from the market and realize that it's actually possible to make money repeatedly, right? They may take a few good investments and realize that it's actually possible. That's when they start to look for this advantage in the market, this way to abuse this edge, right? Well, I hate to break it to you, but unlike those low-tier games that we used to play, like trying to get infinite gems in Clash of Clans or infinite coins in Balloon Tower Defense, it's impossible to hack the market and generate an infinite amount of racks. Or is it? Nah, it's not possible. But there's a different way. Instead of fighting it, you follow the market like a celebrity and you're the paparazzi, right? You take pictures, post it on your article with some clickbait title like NASDAQ doesn't follow SMT sister S&P 500. They're not on good terms anymore. Then you post it on that article, post it on your Instagram story, post some profits, and you sell your subscription to your Discord channel. Well, let's not oversaturate the market that I'm in. But no, that's not what I meant. What I mean is you find the thing that the market does repeatedly, right? That celebrity that always goes to coffee in the morning. And some way or another, the celebrity's gonna end up with coffee in the hand. Whether it means taking the same vehicle, the same road that the celebrity took yesterday, or going to a different coffee shop, or taking a different vehicle to the same coffee shop, taking a different path, right? You wanna find that repeated action that it does, and then take advantage of the actual vehicle that gets the celebrity to the coffee shop. So using the same analogy in market terms, the market is like the celebrity, right? And then the coffee shop is like our fair value gaps. The lower time frame fair value gaps are the vehicle that get the celebrity to its target. And the target is the coffee shop, right? The coffee shop is the higher time frame fair value gap that the market draws to. So thinking of the market in the same terms, the coffee in this case is the liquidity. And the market is like addicted to the coffee, right? Addicted to this liquidity, and in some means or another is going to end up with this liquidity at the end of the day. Now it's just a question of how is it going to end up with that liquidity? Which path is it going to take? Which coffee shop is it going to get to? So translating it over to fair value gaps, right? That lower time frame fair value gap is like the vehicle. Which vehicle is the market going to take that day? And like using those lower time fair value gaps, you can use them as your entries. The higher time frame fair value gaps are the ones on the daily time frame. Every day, the celebrity will push towards that. The market will push towards that daily fair value gap. But Marky, some days fair value gaps aren't formed. Not every day the market pushes and hits a daily fair value gap. And yes, that's true. And that's where we jump into Forex Factory. So let's go back to the celebrity. Yesterday, that coffee really hit the spot. Like almost too well. To the point that the celebrity got sick of coffee for the day. And tomorrow, the celebrity's not going to the coffee shop. So you as the paparazzi, you're not going to have much luck being able to take pictures of your favorite celebrity hitting that same coffee shop that you are aware of. So that day, what's the better action to take? You know that the celebrity's not going to the coffee shop. Don't show up to the house, right? Don't show up to the celebrity's house. You take the day off and wait for a day where the celebrity actually goes to the coffee shop and you can get those same pictures that you always get, write that clickbait title. So in terms of Forex, right, we're jumping into Forex Factory here. Forex Factory is like our indication of how much times this week the celebrity will be going to the coffee shop, because maybe not every day the celebrity wants that coffee shop or needs that coffee shop. So a week like this, the celebrity's insanely busy and needs coffee every day, or the celebrity just simply won't survive without the coffee. It's going to the coffee shop and you're going to be able to get those pictures, right? And then a week like this, where there's a holiday, right? The celebrity's taking the week off, no coffee, trying to get away from that addiction. Up until Thursday, withdrawals are getting a little too intense and we backlash, we hit another cup of coffee. So using Forex Factory, you can kind of see which days you got to go out and capture those pictures of the celebrity. In terms of market, that's just you coming in and being selective about the days that you trade. So you only want to trade the days where the celebrity, the market in this case, will be heading towards that liquidity, heading towards those daily fair value gaps, and you can find those lower time frame fair value gaps that you're going to use to get to the fair value gap. So let's hop into the market, and I want to show you guys some, I guess, visual ideas of how this actually happens. All right, everyone, let's hop into the charts. I hope you guys got the idea of the first 7 minutes of the video, which was just being selective about the days that you actually come into the market. That's the very first lesson that I learned, and one of the most important lessons to learn as a trader, because just like the celebrity, right, on days where the celebrity chooses not to go to the market, not to go to the coffee shop, those are days that you as the paparazzi do not want to be showing up to take pictures, because obviously the celebrity isn't going to show up. You're not going to get your pictures, or you're going to get some bad pictures of something else. You know what I mean? You're not going to get what you were looking for that day. So Forex Factory is our way to this. And I don't know if I'm going to be able to edit these pictures in perfectly. I was saying on that day that as the paparazzi isn't going to show up, you're not going to get much luck. And this is just a picture of the market consolidating, right? It's not going to be delivering to that higher time frame target, which would be the daily fair value gap, which I mentioned as the coffee shop. And then this is a week where you're likely going to get that deliverance to some daily fair value gap, or other days are simply going to create new daily fair value gaps in the market. And then this is a week, an example where you should be avoiding the market. The celebrity's obviously taking a break from the coffee, and you're not going to get those pictures. You're not going to be able to show up on Monday, Tuesday, and realistically expect to catch a nice trade to the daily fair value gap. You're going to want to look for that on a day like Thursday, but optimally a week without a bank holiday. So hopping into the charts, obviously we're going to be on the daily time frame here, and so one of those lessons is like, okay, here we had Thursday's range. Remember, Thursday that I just showed you this week had a red folder news, and we got that deliverance to the daily fair value gap, to the coffee shop. We not only delivered to it, but we went straight through it, closed above, and setting the narrative for the next daily candle, being this one, Friday. But Friday obviously doesn't have news. So sometimes it does deliver, but we can expect it to simply consolidate up until a day where red folder exists. And then from that day with the red folder, then we actually deliver to the target, which is the next daily fair value gap. In this case, it's a daily bullish fair value gap, which was inverted, a IFEG. Nonetheless, we did close above this one. So this is painting the narrative for more buy side. So we're obviously going to be looking for this as the next target. 2645, and that's kind of the idea that some days you show up, right? This week we had Monday range, then we had Tuesday's range, which was kind of terrible, but then Thursday came around and we delivered. So Forex Factory is our pointer to how we can be selective about the days that we trade and the days that we avoid, because Forex Factory clearly shows the red folder news where we'll get some move of volatility in the market that day, right? So that is an example. Like the next day with red folder will likely give us the volatility that we need to actually deliver to the next target that we're looking for. If we then pull into this target, close above it, then we'll likely be looking for the next one, which is this one that hasn't been pulled into it yet. So this is going to be our coffee shop, right? It's going to be this thing that the market does repeatedly. The lesson is that the market repeats everything that it does. It just might do it in a different vehicle or taking a different road to it. And then when you go down to the lower time frame on those days, that's when you can actually start looking for reasons and kind of like a narrative to when this might actually happen, and taking advantage of the lower time frame vehicle. So right here, right, it does the same thing every day. So that same thing would be like market pulling up, closing above this one. Now that we're pulling back into it, we're going to be looking for a lower time frame confluence, like a lower time frame fair value gap, as the vehicle, as the driving factor that's going to take our price to the next target, which is going to be the one that I showed you on the higher time frame. Right? So now we're inside of this lower time frame fair value gap, right? We're going to be looking for the market to respect it. You can already see we're respecting the midpoint we're respecting the lower portion of it. We're not closing below it. Even if we will, it's not really significant because it is a Friday, right? We're not expecting price to be explosive on this day. It's a Friday with no red folder news. But the narrative still stands, right? And this 30-minute fair value gap is going to be the vehicle that drives our price to that target. And if it's not this one, then a new one might form on a day with a red folder news. We also can see that the market has been respecting this one right here. And that's kind of it. You go be selective about the days that you're trading. Then you go into the lower or the higher time frames first. You find which daily fair value gap the market's going to draw to next. Then you go on the lower time frame and figure out which vehicle the celebrity is going to take, which path the celebrity is going to take. In this case, the market is the celebrity, and we're looking for which path it's going to take to get to the coffee shop, to get to that daily fair value gap. That's it for episode 1. I hope you learned from that analogy and you can start to implement this into your trading.